as we saw on Friday, the United States job market is still hot. The NFP report released on Friday showed an additional 272,000 jobs in May, which comes out better than expected. Initially, analysts says their consensus is 186,000, and surprisingly, the job data came out 272,000, which and there is something that even come out to, which is the unemployment rate. But as you can see, there is rise in unemployment rate, which is 4.0 from the previous 3.9%, and this is counterintuitive. What do I mean by counterintuitive? Because we have the unemployment rate coming out better than expected, and there is an additional 272,000 job added in May. So you can see. So the central bank they are monitoring the unemployment figure you get, and then as they see this job growth, they might use it as a reason to hold the initial rate cut saga. You understand? They are contemplating on cutting the interest rate, but as they are seeing this recent job growth, they might actually want to hold the interest rate in maybe the next interest rate announcement. They might want to hold the rate so that especially when we have additional 272,000 job added, and then we have the unemployment rate still a disappointing unemployment rate. As you can see, this is somehow this is it, 272 job added, and then we have an unemployment rate from 3.9% to 4.60%. That's why I said it's counterintuitive. So I think I need to let's see what some analysis say. Let me read what some analysts said here. So number one, from the Bank of America, they said the stronger than expected May employment reports remain consistent with our monetary policy outlook for staying on hold. So as you can see, like, they are contemplating on still holding the interest rate. So this report shows solid payroll gain with positive implication for consumer spending. So we expect the Fed to stay on hold for now and start a gradual cutting cycle in December. So which means that before the interest rate, before the Fed can start to cut interest rate, it will start in December. The interest rate cutting might start in December, which will depend on a moderation in the inflation data. So the next focus now is the inflation data. Don't forget the consumer confidence, and then what is it called, the CPI, the PPI. You get the retail sales too. So that is from the Bank of America. They said they expect the Fed to stay on hold for now and start the gradual cutting cycle in December, which will depend on the moderation in the inflation data. The economy will be cooling, but it is not cool. That's what the Bank of America said. So what about the TD Security? Let me read what they said. They said the FOMC is widely expected to keep the Fed Fund target rate unchanged, at 5.25% to 5.50%, with Chair Powell likely providing a similar policy message to me. However, the risk is that the chairman appears somewhat optimistic given the recent evolution of the US consumer, and if the May CPI report shows further inflation progress, we may look for the dot plot to show 2 cuts as a median for 2024 and 4 for 2025, which means that they might have, if the CPI show further inflation growth process, which means that if there is inflation growth process, then we might have to cut in this 2024. And initially, the Bank of America said we might start in December, and then we get, so which means that we might have, let me just put it like, we might have a rate cut in November and December, or 2 rate cuts in December. It's possible, and probably 4 rate cuts in 2025. Right. So the last one, that's from Evercore ISI. they said within broad ranges, the inflation data, not the job data, will determine whether the Fed cuts in December or not. So all eyes on the inflation data now. So that is what the focus will be. The focus will be on the inflation data. So what are we now looking at on the DXY, on the US dollar? So I believe the US dollar strength has resumed. So last week, there is something that happened around there. We actually saw a breakout of this to the upside, and then it's come down, and then we test this support level. And so the US dollar bounced off this level on Friday. We saw the rejection at this particular level because after we saw the breakout of this, then a deep retest back to this particular area, which I said last week. If you watched the last week Forex forecast, that if we do not have a rejection at this area to the upside, then you should be looking at this area as a sign of rejection, looking for a sign of rejection at this particular area. And on Friday, after the positive NFP report there, the positive job data report, we saw the rejection at this support level to the upside, which signify a lot of buying strength at that particular level. So before we check the individual currency, let's check the economic activities of next week. What Fed is looking at right now is the inflation data, and then we have the inflation data report next week. That is the CPI report on Wednesday, and the same day we have the FOMC still, that is a interest rate report on that same Wednesday. And on Thursday we have the PPI data, that's the producer price index. That is the inflation data we are expecting. So next week, based off of volatility in the US dollar next week, I think these are the two crucial things we have next week. And apart from the Japan monetary policy report, they left the negative interest rate, and to me, for me, I believe they will keep hiking the interest rate. I don't think they are going to hold anything at this particular area, because they need to move. They need to move their currency. They need to find a way to strengthen their currency by hiking interest rate and the next interest rate report. But this is still tentative, so let's see. Probably maybe they will postpone it, or they will probably have a interest rate report that is on Friday, June 14th. But on Wednesday we have the CPI, and then the CPI month over month and year over year, and then later that day we have the FOMC statement, that is an interest rate from the US dollar. On Thursday we have the unemployment rate and employment change from the Australian dollar. Thursday too we have the period, that is we have the producer price index from the USD. I think these are the most important economic activities we have next week. So focus on the inflation data and on the interest rate data out of the US dollar. So I think US dollar there will be a lot of volatility in the US dollar pairs next week. So I'll brace up for it. First thing we want to look at here is gold. So as you can see, there is a break to the downside here on gold. We have a break to the downside at this particular area. So what I'm actually looking out for on gold is to the downside, as you can see, which means that we might see price coming back to this particular, to retest this particular low. So let's just put it anyway to that low, and if that low break, we should be expecting this particular low right there. But we'll actually see a deep pullback in this particular pair next week, in this particular commodity next week. So let's see how price react to this particular area. As you can see, these are the area of resistance, because this is an area of support and then it has been broken. So this should be an area of the new resistance right there. So if you were to put what we call the trend line, you see that there is a breakout before and then it makes a deep pullback before it later reject at that particular area. So if you were to put another one, you see that we have a break of this level, which means that what you should be expecting on gold is for price to pull back to this particular area, and then you can even pull back to this area before you see any rejection to the downside. So that's what I'm actually looking at. So a deep pullback to this particular area, you understand, and a pullback to, that is a rejection back to 2282, and if that level break, we should be expecting 2239. So that's what I'm actually looking at on gold to sell global. Don't forget that you might actually see a deep pullback back to this particular area before you see a rejection. So which means that any retracement you see here, you should be looking for opportunity to sell to the downside. You understand, back to that particular. So keep your eye on the retracement. The retracements can happen on Monday and Tuesday. We have the inflation data on Wednesday, so we might see some retracements, probably maybe a buy can be Monday and Tuesday and Wednesday after the inflation data. If we see the positive inflation data, then we might see a high volatility to the downside. That is which might actually break this level, and then you might see price still coming back to this particular level there. So that is what I can see on gold right now. And on pounds US dollar, so for me, I will be selling this particular pair or do nothing going into the next week. So this is what I'm actually looking at here. As you can see, price has rejected twice this particular area. We have a rejection there and a big rejection at this particular area. So if we want to do it, we might use Fibonacci retracement to actually take our profit at this particular level. So we might actually target probably 38.2 or 50% Fibonacci retracement level as our profit target. So if we go back to the daily time frame, so what I'm actually looking at here is for a pullback, a pullback and a rejection at that level. So this is let's check the 4-hour time frame. So at 4-hour time frame, you can see that we have a break of this already, you get, and this is the next support level right here. So which means that we might have a deep pullback back to this area, you get, and then a break back to 1.26, you get back to 1.2650. So I'm on the sell bias on GBP USD, but I wait for the pullback I wait for the price to pull back to this level, or if I see any rejection before that particular level, then I will join the sellers next week. And then if this level break, should be looking for price back to 61.8 Fibonacci retracement level. Same on Euro US dollar. I'm actually looking for a sell setup at this particular level. So if you see how price reacts to this area, as you can see, we have this area is a level of resistance. It's a very, very solid area, because as you can see, price keep rejecting and then rejecting. So on Friday, after the drop of the job data, we saw it reject with a high momentum to this particular area. So what's the next thing we are looking at here? We are obviously looking for price to do its own pullback. Then we actually enter a sell bias back to this particular area, and then the next level. This is the next level here. So what I'm actually looking at is a deep pullback. So we might see a pullback coming back to this particular area, which means the price might do a deep pullback Monday and Tuesday. We might see price coming back to retest this area before we see a sell pressure coming back at that particular price level. So be expecting a deep pullback, because if you check this area, to this area is a level of is a support level. you understand, is a support level, and then we can also call it support area, because if we don't use that line, we might actually use something that will actually expose that level. You get from here back to this particular area. So expect a big pullback. So which means that any retracement I see back to this area, there's an opportunity for me to look for a sell setup back to 1.07280, and if this level break, we'll be looking for a sell setup back to 1.06140. So that's what I'm looking at on Euro USD. On AUD US dollar, the same thing. I'm looking for a sell setup too on AUD US dollar, and if you check the weekly time frame, you will see that the O direction is to the downside. As you can see, all you can see here is price moving to the downside. You get, there's a big pullback, a drop in price, a pullback, drop in price, a pullback, as you can see. So probably let's see how it goes. But what's powerful to me here is that the pullback here did not break this low. The pullback here did not break this particular low, which means that this one too might not break this low. But let's see, we can't just talk like that. But let's see, if I'm to say here, I'll be taking my profits at 0.64288 before that particular low right there, because you don't know what might happen at that particular area as price didn't break those lows. So yeah, this is where I'll be looking for a sell setup. So me, after price break this range, because you can see this is somewhat to a range, and then there is a break. So which means after that range break, you might see some pullback back to this particular range before we see a rejection to the downside, which means that we might have the first TP at this particular area if there is an obvious rejection at that area. And then, as you can see, there's a breakout of this level already. You get this level breakout here, and then as you can see, we have we should be anticipating a pullback at that level. Yeah, we should be anticipating a pullback at that level. But here too, this is a very solid area of support, and price has breakthrough it. So which means that we might look for this area as our area of resistance, where price can pull back to before we have a decline in price back to 0.646821. And the next one is SND US dollar, which also state that I'm looking for a sell bias on that one too, as you can see. So here too, price did not create a new low, so which means that if we put this piece of puzzle together, if you want to take your profits, your profit should not exceed 0.59470. That is your profit taking level, should not exceed that particular area. And here, the daily candle might actually do the pullback for us on Monday. That is the Monday daily candle close. So you can actually put a Fibonacci retracement to target. You see a rejection in 15 minutes on Monday, enter a buy, take your profit at any of this level, 38.2 or 50% Fibonacci retracement around. But what I'm actually looking at here is for price to do a big pullback and then a sell rejection setup. We should see a bearish reversal after we have the pullback here. Then should be looking for a bearish reversal back to this particular area, as you can see. So that's what I'm actually looking at that particular area, which means that we might see a pullback back to that particular level, which might actually form probably maybe head and shoulder before it's continue the fall. Again, so the last pair I want to check out today is Canadian dollar JPY. As you can see, like I said, JPY actually comes out with interest rate hike next week. You understand? That is on Friday, but it's still tentative anyway. So let's see how it goes. So my bias on Canadian dollar JPY is to the downside. As you can see, this is the high price in which that particular high, and then we saw the rejection at that particular area. So if we now connect this line together, you can see, so connect the most obvious one, which is a 1 2 3 4, and then there's a breakout, a retest, and then this is what you should do here. This is an area of resistance. You give support here, there's a breakout, then there is a rejection here. So probably I might be selling this particular pair earlier on Monday, maybe after 1 hour candle or 4 hour candle closes during the Asian section. So I might enter a sell setup from here, and then take my profits here. Then my sell should be above, probably let's go 1:2. So let's go 1:2. So probably this might be my sell setup that is earlier on Monday. That's my first setup, because there's a high probability that price will come back to 111,659, and as you can see, we have a weaker Canadian dollar. So which means that a stronger yen and a weak Canadian dollar can drag JPY back to 111,659. So that's it on the weekly forex forecast. You can join us in the Telegram channel where I drop all these updates. That is anytime I want to enter this pair, I drop it for free in our Telegram channel. And then mind you, we have the premium channel which will be activated soon. We are running a premium forex group before. That is a paid signal group which you pay, and then we'll add you. But along the line, we'll pause it for a while, and then probably we'll resume it very, very soon. The announcement will be made shortly when we'll resume the premium signal channel, you understand. So but for now, the Telegram members are still enjoying free signals. So there's a link in the description to join the Telegram channel. There is also the link in the description to actually register for a reliable broker, which is a hot forex, no deposit problem, and then easy withdrawal method, which you can use crypto, your bank account, any withdrawal means, and then you receive your money instantly. So that's it. And then don't forget that we have the working GBP US dollar bot, which has been consistent since last year. It's almost a year of consistency, and is making an average of 10% monthly. So you can contact me if you want to get the bot, and if you want to connect for free, you can contact me, but you have to have a minimum balance of $1,000. That's the minimum the bot can accommodate for you to connect it, and then have a very safe withdrawal. So don't forget to trade safely, have a profitable trading week ahead. And next week is Salah, so we won't have the weekly forex forecast next week, as we are celebrating Salah next week. So probably the week after, then we will resume the weekly forex forecast. Thanks for understanding. Have a good weekend ahead.